Well, guys, as we expected, the markets have continued to drive higher into the main trend line, but we also knew that tariffs and potentially earnings season could knock it off its perch. So what are the biggest traders and investors in the world doing right now? It looks like they're starting to move potentially a little bit defensive, and this is the first time we've seen it in weeks and even months. So in today's video, we take a look at where Wall Street is really starting to put its money. Could it be that crypto is the place to be? And what's going on with Tesla? The American party? Could this be the kryptonite for the stock? Guys, we've got a lot to get into, including some of the biggest options levels for stocks, commodities, and cryptos. Let's have a look right now together, see what we can find. Well, welcome back everybody to the Daily Show. My name's Tom, and in today's video, we'll be covering the latest macro data and of course, key levels. If it's your first time here, then remember to subscribe and smash that bell icon if you love markets like we do, as we cover them every day with a lot of detail. Let's kick things off with the macro side, and we'll start here with the tariffs because of course, this is now the big news story of the last 24 hours. And who couldn't have seen it coming? Yes, of course, the markets have sold off a little bit on this, but the main thing is, will it stick, or are we going to see everything just keep getting extended? So we obviously know that these are the new deadlines for August, and it looks like here, according to the July 7 letter, we're moving ahead with slight changes to countries like Japan, and of course, some even lower changes here when you're looking at others. These are the main countries, though, that seem to be picked out, I guess, by that July 7th letter. And if it does stick, remember, it will put friction, especially if we see retaliation on the markets. So it brings us to where are we actually with this market rally? You guys know that we've been following technology and semiconductors. Really, that's all that matters. In the US market, innovation is key. And as you guys know, 83% of the time, innovation businesses will outperform others. And that's exactly how this rally has been so far. And this great chart here from Duality Research kind of shows you how everything's been performing as we've been moving up. Semiconductors have been the best, technology's been kind of the second best, and actually metals has been the third best. So we've kind of really had that pick of three main sectors. What hasn't done well, though, is healthcare, staples, and utilities. And as most of you know, these are the defensive sectors of the market. And if we start to see them moving forward, especially at all-time highs, then that could mean that the market's getting ready for a bit of a sell. And yes, you may have guessed it, the last 24 hours was the first defensive day we've seen in weeks, maybe even months. So certainly something we'll be paying attention to. It also looks like if it's in the press, it's in the price, has started to dissipate in terms of people being fearful of America. The Sell America story count dropped all the way to almost no news stories, according here to the latest research. And that's a huge contrast, of course, to some of the big spikes that we've had. If you've ever been following markets, you'll know that when generally the markets are roaring with some kind of concept, that is, let's say it's Sell America in this case, then generally you want to be considering the opposite side, especially if the technicals and the flows are showing that way. And this is where we get to the next list. Yes, we've gone to an all-time high, but we haven't done it in the equal market, which basically means that in equal weighted, we're not going up with all of the country's kind of stocks. We're really just going up with innovation. And while there's no real problem with that, at least initially, eventually you do need a full breadth kind of pickup to really sustain these all-time highs and to continue moving on. So over the last 24 hours, what did we get, guys? Well, we did get the first day of defensives. Gold, utilities, staples, healthcare. These were all the sectors that were doing the best. And you may notice that semiconductors was actually one of the worst performers. Now, this could show us rotation, and if we see this over the next 3 days generally, then that will tell us that maybe the market's gone defensive. What we'll be spotting for, and we'll be looking very closely, so make sure to subscribe for this, is big, large, dark pool transactions, particularly in sectors such as semiconductors and tech. If we get those and we get a defensive rotation, then it will make sense to this chart as well, and that is that the seasonal strength of Christmas in July might be starting to weaken off. And you guys know that this is what we generally expect, which is strength from the back of June into the start of July. Obviously, at the time of this recording, we're the 8th of July. And then somewhere right around the middle, we seem to have problems. Now, if you've looked at your earnings season calendar, you may notice that the 15th is also JP Morgan's earnings report and I believe a CPI data report. So we've got a lot kind of hinging on the middle of the month. And of course, earnings season is about to kick off. And why does this matter? Well, it comes back to valuations. Now, according to this particular metric, you can see here, yeah, we're overvalued again. And Gainify has a cool chart here. And I always like to look at this because, yeah, it's a good way of kind of, consistently saying, is the market cheap, such as down here, or is the market expensive? Well, right now, you may have guessed it, there's a little bit of FOMO in the air. Probably a lot of your family, friends, and maybe even yourself are feeling, the pain of maybe not being in some of those biggest growth stocks, or maybe you're just riding high and thinking everything's so fantastic. Whenever you feel those emotions, usually you're getting close to the tippity top for that particular period. And it does make sense to be there right now. But coming into earnings, this is where we're going to find out whether tariffs are starting to take their effect. Remember, the tariff lag tends to be around 4 months since implementation. Now, we implemented tariffs, or we at least started to find out about them during Liberation Day. And obviously that was getting on 3 to 4 months ago now. So we're starting to get to that point where earnings may show the problems. In terms of where the strength has to be, it's the mega caps: Nvidia, TSM, Google, Meta, Microsoft. These types of stocks have to show strength. Otherwise, the market will not be able to hold higher. And it really comes back to that thought process of year 3. Whenever we have 2 exceptionally good years, over 20%, such as we did in 23, 24, absolute ticks, we knew back in 2024 at the end that this year was going to be choppy. Now what we've done is we've managed to get the all-time high. And of course, usually we go back into what we call a kangaroo market, a market that goes up and down and all around. It's very normal for a year 3 market to do this if we follow the similar trend. So don't be, unaware that this is kind of what generally does happen. And even here, when we look at overall post-election year cycles, we generally see strength into choppiness, into more choppiness in the midterms or the mid-year, and then, of course, strength into the back end. So will we focus on this? Absolutely. This is kind of one of the big key reads that you're going to be looking at markets, and it makes sense when you're looking at everything across the board. So the good news for now is that advanced decline line has made an all-time high. We are seeing stocks starting to pick up, and we're also been seeing a little bit of US dollar weakness. But this is where I think Wall Street might be starting to move into. We have a negative 32 when it comes to US dollar overall positioning. Basically, nobody believes in the dollar anymore. And while we've been incredibly bearish on the dollar during 2025, as you guys know, well done to you, by the way, we did hit that magical 96, 95, 50 level only a few weeks ago, or maybe even only a week ago. And this is where things could change for the dollar. The narrative is horrible. It's really bad. It's the worst we've seen in years and years and years. But could we be looking for a trend change? Well, as we always say, we follow the flows, and we do so by following the technical analysis. So stick around, as we do have the dollar chart coming up to have a look at soon. In terms of where the market may go, if we do end up seeing a sell, a lot of the time the markets will go to very weak businesses. Those are the ones that have been consolidating for a while. Things like Pepsi and others, we have seen consolidation in them. Actually, one of our members in the private trading community, links in the description and pinned comment down below if you want to join us there. He actually found Pepsi only about a week ago, and it was a pretty good trade. And again, it just shows you there's so much abundance in this mindset. So many different opportunities. You miss out on tech, there are other old legacy businesses that can do well. And of course, there's always something else out there. Guys, always remember this. Never feel FOMO, never feel fear. How many times have you seen great ops and then missed them and then seen a new one next week? Keep the powder dry whenever you feel those emotions. Now, when it comes to Treasuries, a lot of people are trading it. On this channel, we always talk about the idea that Treasuries is more of an investment or positioning process. Do not trade Treasuries. Why? Because they're not really a great trading tool. Some of you will disagree with me, but as we've seen recently, we've had a lot of ups and downs. We did get a massive dark pool just the other day up here at around 88, 89. And since then, we've seen, of course, Treasuries kind of flounder back down. I believe there's going to be a massive trade on Treasuries, especially when the Federal Reserve eventually does instigate QE again. But for now, it's kind of like a sleeping giant. Nothing really going on. Another one that's interesting is that people have started to transact on some of these hypergrowth stocks. The storylines are awesome for Hood, but we also saw the largest transaction of all time on this 2 times long ETF. And that probably is a take profit at the peak. So this could mean down to sideways action for Hood for now. But certainly the tokenization and everything going on in the crypto world has everyone talking. And rightfully so. It looks like crypto, at least Bitcoin and some of the other big ones, could be in for a bit of a boom here thanks to the US government. Weekly crypto asset flow continues to be pretty strong. And we've had some excellent months of kind of consolidation here in the charts. And one of the things that I think is really, really, really big, and we spoke about it in our Monday live show, was that crypto is now seeing more MSTR clones. So I think there's somewhere between 100 and 130 MSTR clones out there, obviously not as big as MSTR, but they're all borrowing the concept of, we don't really make any money as a business. I know what we'll do. We'll become a Bitcoin business. And they're buying Bitcoin, allowing people that, of course, cannot access Bitcoin in terms of risk to buy it as a stock. And this is leading to a whole new, I guess you would say, type of kind of system out there. At the moment, most of these are trading at 2 times the value of Bitcoin, but obviously that's going to compress over time. And what we're getting at here is that these guys own around 3% of the overall Bitcoin market. So if we consider that probably 80% of the Bitcoins are not traded, some are lost, some are just hodled, etc., then we're probably only moving to around 17% float at this point. Of course, approximate numbers. So what's happening? We're getting a drain on the liquidity available here, which can lead into some massive squeezes on the horizon. Remember, the Bitcoin contract is now, I think, the second largest options contract out there in the world in terms of how we're seeing this traded. So just a couple of things here. Stable coins are going mainstream. We all know this. Tokenization of everything is going through. Volume's starting to dry up a little bit. And of course, the US dollar is starting to sit around the same level. So we are pretty much at a textbook basing period as of the peak here for Bitcoin. Will we need another wipeout though before it goes higher? That's the question. We'll answer that hopefully today in the video. So these are the big announcements coming through. We already knew these tariff discussions were going to continue into the 9th of July, but do remember the 15th. JP Morgan report, big one, US CPI. It's the double header and it's only about a week and a bit away. So remember, earnings season, it's going to be volatile. We will bring you all of the options expected moves, but yeah, be careful out there, guys. All right, let's jump into the options flows for the main stocks and of course the S&P 500. What's it looking like? Well, for now, we've got that major trend line. This is the one that most people are going to have. And the reason we've all got it is pretty simple. Of course, we can see here that it goes through the previous highs and it makes sense for us to get to it. It also is around that 6,300 level. Now, everyone's going to be aiming for that. So you've got to be a little bit careful when it comes to this price. Why? Because the market's had an exceptionally good run. Remember, the big thing we were looking for is, do we have a flag? And of course, if we had a flag, if you take the pole length from here to here, that's exactly what we reached. And if you take the pole length of the break, which a lot of technical analysts do, then we get the top of this trend line coming through. These are the options high and low levels, but pretty much is what most people are looking at. And there'll be 2 levels if we do pull back that you'll want to pay attention to. First one, the daily 20 moving average. It's held up amazingly well. We've seen a series of higher highs and higher lows. And as you guys know, if we get higher highs and higher lows, we're always looking for, of course, those to be bought by algorithms. And the big one is going to be mean reversion, which is the weekly 20. Now, this is the classic one that we tend to look for because you guys know it's an exceptionally good bull run style pickup. In particular, if we go back to 2020, which is probably the most similar V-shaped reversal, we got 2 taps or actually 3 taps to the 20, and it was just completely ballistic after that. So do remember the 20 moving average on the weekly. That it seems to be a key point that a lot of hedge funds and other big institutions that are behind may want to try to buy in. And we did manage to squeeze only a week ago a lot of people out of this market. So we're really in that kind of, question mark area. But what do you guys think? Do you think we're going to just smash this trend line and keep moving higher? Is the pain trade still to the upside like we've thought over the last couple of weeks? Or are we getting to the toppy end? What are you doing? Let us know in the comments down below. Let's have a look at the options and see if it agrees with that. Well, it looks like 1 day of news or tariffs and we get puts. Look at this. Everyone flocks to the puts so quickly. 6,200, 62, kind of 40. Wow. Puts out of nowhere. Yeah, they're not huge in size, but still, we've kind of got some walls there over the next 24 hours. If we give up 6,240, we're probably going towards 6,200. If we give up 6,200, then we might be seeing a waterfall style event. But the same things happened, 6,300, 6,275, 6,300. We've still got overwhelming calls in this market. But yeah, starting to see puts come back through. And as you guys know, every time we ever see any sell off, everyone says, this is the one. And then they all jump in. If that becomes too much of a crescendo, there's too many options there. It really does act as a good buy wall. And the daily 20 in particular on the S&P is going to be the level to watch out for. Let's have a look at Tesla. This one here, it's being supported probably only by puts. Obviously, Elon getting into politics once again, making people like you guys, maybe some happy, some unhappy. Let's get away from that, but let's have a look here at the options. And as you can see, 300 and 285. We know that this block here is everything to the price action. So as we'll look at on Tesla in just a moment, this is going to be the level where it needs to hold. If it gives up 285, 280, we're most likely going to see something like a 240 on Tesla fairly quickly. And it is certainly open, especially if we continue to see truths and tweets and everything else come through from both Trump and Elon. What about Nvidia? Well, it's still kind of struggling around that 160, 165. We know Wall Street has upgraded it. We know Wall Street would like higher price, but maybe they want to dip it before they get that higher price, use a bit of that Christmas in July cheer to drop off the markets, and then, of course, pick it back up at a slightly cheaper rate. In terms of bonds, no new updates, guys. We are not seeing a market that looks very negative. I mean, this market is strong. It's making a series of higher highs and higher lows. And as we've continued to say since April, nearly no problems here in the market, at least according to the bonds market. And I tend to believe the bonds over, I believe, the news articles. What about here for the put-call ratio? We're seeing a drive up a little bit here of puts as the news kind of goes into overdrive on the tariffs. And obviously, when you're up in these levels, usually a really excellent time to think about buys. When we're down in these levels, you're starting to say, well, maybe I want to take a little bit of profit off, or maybe just leave a bit of powder for a nice pickup in the future. And for now, we're kind of getting back to the middling zone. So no real edge there on that chart anymore. Where I think the flows are starting to go, though, is crypto a little bit, and of course, US dollars. So everyone's weak on the dollar. I think this is the most one of the most well-known trades. It's also one of the most well-known hedges. And just over the last 24 hours, dollar did pick up for the first time, actually showing a little bit of strength. It managed to break through this high here, and you can see that we've got a little bit of a higher high. So that means that if it comes back and tests 96.50 now, there may be buyers pressuring in for a 98.50 or a 97.50 kind of level. So for me, I think that I wouldn't be as negative on the dollar anymore, at least temporarily here. And we're watching very closely. I would say, yes, the bulls have started to control a small time frame though. And of course, weekly, monthly, and daily are still all technically down. So be aware that, yes, we're in a downward trend, but I think there's some consolidation here. Gold, another one that's very popular. Obviously, you guys know I'm usually bullish gold. When am I bearish gold? I'm usually bullish gold, but actually a pretty good setup here for the potential of bullish gold. Looking for a 33.60 kind of break to really get some further consolidation. That'll be like an inverse head and shoulders, and obviously push towards that 34.40. I am hopeful gold can start to rally again fairly soon. It's had its typical pullback in time, and some nice stuff here on this chart. And silver did the same kind of thing, rallied up, then dumped, and then found some nice buyers again. Look at these wicks. Nice wicks here. So if we get above 37, looking good. Not all-time high, but certainly recent all-time high for silver could be in the works. And US oil, I'm still confused. Maybe some of you guys aren't confused. I think here I can make a case for buyers. It's not really a replication buy for me. A lot of geopolitical tension stuff could come in here as well. So just remember that is a dangerous pick. And for Tesla, it's on the put wall. Are we going to 285? Are we going to just hover around this price for a little bit and consolidate? I think it's a bit gamblery if you don't know exactly what you're getting into. And do remember that weekly did have that nasty candle on it as well. So yeah, you've got to kind of hope that Elon gets off the politics. If he stays in it, I think it could get a bit nasty there. So just watch that 280, 300. We have no real edge at this point other than knowing that's a decent support line for it. Nvidia continues to rally, but 160, 165 is a lot. And I think the key here is going to be semiconductors. So when you're looking at semis, you can see that they've also hit that all-time high and they're consolidating. So are we overbought? Yes. Does that mean we all sell the market? Generally, no, but it's certainly a point where when you've got the best sector in the market at its all-time highs, you usually expect sideways to a little bit of down action. Why? A little bit of profit taking. I mean, that's been an exceptional return. I mean, who wouldn't profit take a little bit off, especially if you were a shorter term trader, when you're up around 65% if you got the lows, and probably in here still about 40, 50. So some exceptional gains. That's why that's happening. And with the Russell versus the S&P, we're still not seeing super risk on from the small caps. So it's not like we've got that rotation really occurring fully yet. Chinese markets holding its own for now, a series of higher highs and higher lows. We'll update if that changes. And obviously the US 2K getting closer to that TP zone, which we've got just up here in this supply area. So we kind of hit into it, into the box, but not quite the perfect level yet. We'll see how that plays. Obviously, it's a bit of a risk here. And then, of course, we've got a trend line here for the NASDAQ, which is very similar to the S&P. So everything's kind of correlating. We've got the dollar finding support, which is a hedge. We've got the S&P 500 and Russell and NASDAQ all very close to TP zones, which are these trend lines. And of course, we also have some catalysts, earnings. Maybe it's not good. And we have other things that are coming out, including the tariff stuff. So just be aware that these things do make sense when you consider them. And we haven't had that kind of thing that makes sense for a while. This is the type of thing we look for in markets, though, in terms of key levels. So, of course, we'll be watching very closely. Ethereum, no changes yet. A lot of you guys want updates on this, but I mean, really, it's just kind of sitting right around that previous resistance area. And I think Bitcoin's going to be the lead, as always. So the thing with Bitcoin is you look at it and you say, oh, well, it doesn't really look like much. That's true, but with this type of thing, we break through 110, we get that higher close, and it's just going to start squeezing. We know flows are going in. We know that deregulation is coming. The problem is everyone does know this, so it's often, if it's in the press, it's in the price. But maybe people haven't priced quite in the way that these businesses are going to run this debt kind of thing that's coming through. So I wouldn't be surprised if the 130 plus businesses that look like MSTR continue to rise. They continue to suck up Bitcoin. That potentially causes some possible squeeze. It's plausible. And then, of course, we maybe see it go badly. I mean, I don't think it's going to go end well, but for now, you can kind of see why it's consolidating, and obviously a breakout could be interesting. For today, we've got, of course, the RBA cash rate for New Zealanders out there. The RBNZ rate is tomorrow. It's expected, by the way, that Australia will cut rates again. And then we come in here, FOMC meeting minutes on Thursday, and then basically unemployment rate for CAD. So the main news here, guys, is going to be next week. It is tariffs for now, and then earnings. And earnings will matter. CPI is going to matter. The 15th of July could be a big day. So make sure to stay tuned for that. And also to follow us over on X, and also follow me on LinkedIn as well if you want to. I'm posting there this weekend, big post about psychology, what you're going to need to do over the rest of the next 6 months for the markets, and why this matters so much. Guys, I hope you enjoyed today's video. Thank you so much for the support. Smash the like button, smash the alert button for incoming vids. And boy, oh boy, is this going to be a wild 6 months. We've got a lot of info coming out, and I think a lot of huge moves. Abundance mindset, everyone. There's a lot of op on the horizon. Bye for now.